Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka.
And hello there, I am Yatin, Mota.
Well, it was a perfect start to Tuesday morning with the Nifty conquering that 24,200 mark as well. But soon after, profit booking kicked in and we ended just about very flat. The Sensex was trying to edge back into the green, but that was a failed attempt as we ended in the red with the Sensex down somewhere around 35 points or thereabouts. The Nifty as well managed to defend 24,100, nevertheless down 18 points or thereabouts. So yeah, extremely flat. But the Nifty midcap index was underperforming today, 0.8% kind of a downtick coming in on that index. The Nifty Bank index was down somewhere around 400 points or thereabouts. It was once again the IT pack, that lent support, right? And that was extending gains from yesterday. Yesterday the IT pack was up 2% and even today good traction seen there. A lot of these names like Wipro, TCS, HCL Tech, in the green today. But the breadth was tilted in favor of gainers, marginally so, 1:1, that was the ratio on NSE advanced decline. And if you look at the sectoral laggards, banks as I mentioned, auto, FMCG, PSU banks as well, yesterday as well that index was down, today extending losses. Aside of IT, what did well was Realty and pharma as well ended in the green. In terms of gainers, you had L&T, that stock has not been firing up of late, but today there were reports that the company has won a $4 billion deal from Saudi Aramco. On the back of that, the stock was up and about, top Nifty gainer. Wipro, Infosys, TCS, the trio from the IT pack among the top gainers, and so was HDFC Bank as well today. On the flip side, you had Airtel, Kotak Bank, Tata Motors, SBI, Shriram Fin, these were some of the laggards. But Yatin, on the Nifty 500 index, it was discount brokers, right, saw the brunt of the selling, likes of Angel One, Motilal Oswal, 6 to 8% losses coming in. Of course, there's been a Sebi circular on how they really charge, discount brokers in terms of transaction fees, right? Throw some light on that. And how would it really impact their top line?
So, this is a very interesting order or direction rather coming in for Sebi, when it comes to the stock exchange treatment of how they really distribute incentives to brokerages. Now, a lot of brokerages get incentive fees from the stock exchanges depending on the turnover that they do for their various products. Now the index funds or the index options or stock options, there are a whole host of products which the exchanges offer to the customers or the traders, right? Now these discount brokers, because of the scale at which they operate, the kind of clients that they have, they make a very huge amount of volumes in the option markets, in the futures markets. Now what happens is that once you cross a threshold turnover, the exchange will give you a higher amount of incentive. So clearly the exchange has slabs for various brokerage firms according to the turnover that they do in various products. Now what Sebi has said that there has to be a single window incentive that the exchange will give it to the members or the brokerage firms. What happens is that currently companies like Angel Broking or for that matter Zerodha earn incentives because of the higher volumes that they are able to generate on stock exchanges, and they are probably passing some of the benefits to customers in terms of low brokerages or low fees, and on the other hand they make 100, 200, 500 crores depending on how much turnover they do on the stock exchanges. With Sebi now clearly indicating or rather directing the exchanges that there can't be a slab wise thing, or there can't be a situation where a brokerage firm who does higher turnover gets higher benefits. It has to be equal for all. Now what happens is that the advantage that companies like Angel One or probably Anand Rathi or 5 Paisa or Motilal Oswal or for that matter Zerodha has, that has been clearly taken away from this Sebi order, and this could impact the earnings in the short to medium term. So clearly the kind of option speculation that we have seen, the kind of action that the government really wants on curbing incentives for option trading is now clearly seen in Sebi orders. Probably this can be two things. Number one is to disincentivize people from making clients do more work on options, and number two is that the rate has to be uniform across the platform. So the exchange can't have a differential charging mechanism or a discount mechanism or an incentive mechanism for brokerage firm. It has to be one. The regulation has to be one. So I think that has been given by Sebi, and probably that is the reason why stocks like Motilal Oswal, 5 Paisa, or for that matter, Angel Broking were down anywhere between 5 to 8% in trade.
That's true, Yatin. It's kind of they've taken it on the chin, right? But aside of that, Yatin, some other movers that I want to point out on the Nifty 500 index before we move on to the stocks that are on our radar. JK Paper, SL Propack, Solar Industries, Sumitomo, these are some of the top movers on the Nifty 500 index. Of course, aside of Angel One and Motilal Oswal, we had Max Healthcare as well as Vodafone Idea. These were some of the laggards. But Yatin, one stock that stood out once again in today's session was Wipro, right? Yesterday it earned a double upgrade from CLSA, but today once again the entire IT pack was buzzing. A lot of these analysts are turning overweight on the IT space as a whole, right? There were a couple of more brokerage reports that came out today. You have this entire IT pack on your radar. Why don't you fill us in?
So, we have the earnings for most of these large cap IT companies which will start coming in from next week onwards. So, Motilal Oswal has come out with a report on IT sector for the quarter gone by. Now, in the fourth quarter or the quarter gone by, Motilal Oswal is expecting that the revenues of IT services companies will recover following a tepid Q4. So, the first quarter earnings should be looking up on a sequential basis because Q4 had a smaller base, number one. Number two, the ramp up of large cost takeout deals could drive growth for large cap IT names such as TCS, Wipro, which have won larger contracts, and that contract scales up in execution. So, that benefit will start coming in from Q1 onwards. In fact, there is little evidence of recovery in the flow of business, but discretionary spends are picking up slowly. So, it's not that spends have come back from clients in the US or Europe, but they're gradually coming in. So, the recovery path could be gradual. In fact, if you look at Q1 performance, if that is disappointing, Q2 also could be under pressure according to Motilal Oswal. So, the Q1 results will be quite important for IT companies because Q4 had a lot of impact of weak business, but the TCV was good. So, a lot of things could be seen in Q1 in terms of how execution picks up, what are the margins, what are the new order wins. So, I think Q1 is one results which will be watched out for. But I think Motilal Oswal is slightly skeptical because Nomura also had come out with a report. They're expecting stocks like Wipro to do well. So, whole host of brokerages are now trying to guess what IT companies will do. But I think next week when the results start with major TCS and Infosys, I think people will have more clarity as to where in which direction are IT earnings going, or probably the stocks as well.
That's true, but for now, for the last 1 month or so, we've seen quite a lot of action building in the IT stocks. Of course, we'll be watching out for those results that start trickling in from next week. But aside of that, another stock, that was among the Nifty gainers today was the stock of L&T. The stock hasn't been doing all that well. Every other day we see L&T featuring on the losers list, but for today we saw L&T emerge as the top Nifty gainer, and that was on the back of reports which I think I saw you also doing a link on Avaz that reportedly the company has landed or bagged a $4 billion order from Saudi Aramco for its gas projects. Now, L&T Energy and Hydrocarbon have won package 1 and 3 for Jafurah project according to reports, and it's a 35,000 crore rupee order for gas compression systems. Aramco in fact has planned a $110 billion Jafurah gas project in the eastern province, and these the order that L&T is reportedly has reportedly bagged is part of Aramco's $25 billion EPC contracts for gas expansion programs. But L&T is yet to really confirm the winning of this particular order. Now, package 1 is for gas processing plant and main process units. This order is worth $2.9 billion, while package 3 is $1 billion order for gas compression units. Now, both these of course have been awarded to L&T's Energy Hydrocarbon division. In September last year as well, L&T had bagged 2 EPC contracts from Aramco as part of its this Jafurah project expansion itself. But order wins have been there for L&T, right? Every other month we see L&T bagging big orders, but margin expansion, that has been a bit of a concern for L&T. So in the first quarter of FY25 also, the margin is something that the street will really be watching out for. In total, the stock has not done all that well in the last 3 months. It's been largely flat, and it has been down somewhere around 7% or thereabouts in the last 1 month. Yatin.
Nandita, L&T's hydrocarbon division head, he was with Awaz, and he said that there are a few projects which got deferred, which got awarded again to L&T, and there are a few new orders or new deferred orders which will come with L&T. This is one important clarification, because this Jafura gas project got delayed and the awards got delayed. First it was given and then again got deferred, and again now L&T has backed those contracts. So I think the L&T management spoke to CNBC Awaz, and they gave information as to few deferred orders have come back and few new and deferred orders will again come in, which will probably boost their overall hydrocarbon business in the Middle East, with the export order book or the overseas order book shining versus the overall order growth. So yes, large projects being awarded by Saudi Aramco, and I think L&T is one of the beneficiaries when it comes to newer projects in the Gulf region.
That's true, Yatin. That's one stock that will be on our radar, of course, in terms of earnings as well, as I mentioned. But Yatin, have you seen Kalki? It released over the weekend. Did you manage to catch it?
No, but is it doing well on the box office?
Oh, of course, it has already become 2024's highest grossing Indian film, right? I mean, it's after a long time, all the Jawans and Gadars, after that we haven't really seen a very big blockbuster coming out. But this seems to be it, right? Because, in a matter of 4 days, it has already crossed that 100 billion mark, right? And it is expected to be somewhere around 700 to 800 billion. That's what I have picked up from all the brokerage reports that I have read. Crores rather, not billion, if I may stand corrected. In fact, today there was a report from UBS. It has a buy rating on the stock. Target price has been cut to 1800 from 2075. Although the stock was doing well right yesterday, entire day, but today it was under a fair bit of pressure because UBS, although it has a buy rating, it has cut target price. It says that Kalki enough will not be enough to drive positive EBITDA in Q1 for PVR. 2/3 of the collection from this particular movie has been made in regional language, but there the presence of PVR is fairly low. And a lot of hopes will be pinned on the second half of FY25, because there are quite a few movies lined up for release, both in terms of Hollywood as well as Bollywood. For Bollywood, there are some few big ticket movies like Pushpa 2, which is slated for 15th August release. You have Stree 2 as well, August release once again. So these two will be among the big releases. And when it comes to Hollywood movies, the pipeline is pretty strong and quite good. Despicable 4, that's one. Then you have Deadpool and Wolverine. So these are some of the movies that are high grossers, right? Pipeline looks strong, but aside of that, the fact that people are still not ready to go out to watch movies in the theatre will remain an overhang. Although PVR has been doing quite a lot, in terms of its business, looking to reduce debt. Management has time and again said that they plan to become net debt free pretty soon. So that's one thing, and they have also been launching new multiplexes, right? Yesterday only they had launched a new 4-screen multiplex in Hyderabad. So that also there, but they are also shutting down the multiplexes that are not doing well. Aside of that, ad revenues are pretty good over the medium term. It's expected to sustain, and the company has also maintained that the ad revenue will reach pre-COVID level on an absolute basis in this current financial year itself. It also plans to sell some large land bank of 300 to 400 crore this year itself and try to pay debt. So yes, I mean brokerages are positive, like Nuvama, MK, they all have positive buy ratings. But the mood is still cautious. You have to see how really the movie pipeline turns out, what kind of collections are there from all these movies. Stock is up somewhere around 11% in the last 1 month, but on a YTD basis, it's still down 10%.
Absolutely, and I think PVR Inox, one of those quiet stocks, did well post the COVID wave, wherein multiplex stocks crashed. Then was the phase where all of these stocks caught up, but I think a lot of underperformance in the near term is what we saw for PVR Inox. Probably people are not watching movies as much as they used to before, but I think newer movies and blockbusters probably could revive the future or the near term for all of these stocks.
Well, that's true. Friday is still some time away. So if you haven't seen the movie, I haven't seen it. So maybe on Friday, who knows. But with that, I think we've come to the end of this edition of Closing Bell. We have ended flat, but let's see whether or not we manage to regain some momentum tomorrow or not. From Yatin and me, thanks a lot for watching. Stay tuned to Money Control for all your other news and updates.
Thanks.